Hello everybody, I'm Seth Weissman and welcome to another episode of Safe Real Estate. A number of realtors have asked me the question, what happens to trust funds if the bank in which the trust funds are located fails? And it's a great question, and here is the answer that we wanted to get to everyone right away. The good news is if a law firm or a real estate brokerage firm, let's say hypothetically, has $1 million in a trust account, what the bank does in the event of a bank failure is not treat that money as the broker's money or the law firm's money. If it is in what's called a fiduciary account or a trust account, the bank looks at each individual depositor of the earnest money and they treat each deposit as separate. So if I have put up $5,000 in earnest money and it's now deposited into ABC Bank, even though it may be in an account with $1 million, my $5,000 in earnest money is treated as a separate account and would be fully protected. So the good news in most real estate transactions is that your earnest money should be safe in most instances. Now, when I say in most instances, here is the exception to the rule. Let's say in addition to depositing the $5,000 in earnest money, I already have $300,000 of my own personal funds in ABC Bank. Well, in that case, the bank aggregates my personal deposit plus the earnest money deposit, so they would now treat it as if $305,000 is in the bank. And since the limit of protection is $250,000, I would actually be at risk for $55,000. The good news, of course, for realtors is that the United States government appears to be backstopping for the moment all deposits in banks. So the likelihood of any money being lost to a depositor is hopefully a small risk. I hope this episode of Safe Real Estate has been beneficial. I did want to answer this question right away, since a lot of buyers are asking, will my earnest money deposit be safe if I give it to you? It's great to see everybody. Please continue to tune in. Bye now.